And what happened was after the economic crisis 2008, the home builders, rightfully so, got very scared and stopped building houses. And they underbuilt houses for 15 years. So we're in a situation now where we have fewer houses, we have fewer housing units available compared to the number of families and households that exist.
From the grit and the grind to successful minds, live from the entertainment capital of the world, your hosts, Jillian Batchelor and Daryl Hannah.
What's up, you guys? It's Jillian Batchelor.
And Daryl Hannah.
And Daryl Hannah, we are back with Vegas Real Talk.
It's been a while.
It's been a while, but it's just enough time to get back and going because now we're here under our new brokerage, Real Broker.
Boom.
Which we're so excited.
Yeah. Absolutely.
Because Real Broker is taking the nation by storm, you guys. So we can't be more excited to be in Las Vegas in this real estate market. What's happening in the market?
You know, just in the last week, it really seems like it started to take off, right?
It really has started to take off. And guess what, you guys? Today, we have special guests with us. The CEO and founder of Simplifi Mortgage, Jon Gedde.
Hello, hello.
Thank you so much for being here with us. We're super excited.
I'm so excited to be here. Thanks, guys.
And you know why we're excited to have you on our show today as our guest? Because you are the man with all the knowledge. You know all the stats, the details. You know what's happening. You control the Fed. You control the interest rates, right?
That is not quite true, but close. Yeah, I do know a lot of things, but yeah. I wish I had, you know, I joke with you sometimes. I say, if you give me a couple $1 trillion, I can fix the interest rates. I can make them lower.
Yeah.
All right. Just take some money.
Just a couple trillion.
I mean, but he's really like our resident, like economic expert, right?
Absolutely.
So we go to him and we're like, you're the data guy. You know the numbers.
I am the data guy. I'm always looking at spreadsheets and reading the economic news and following what's going on. For sure.
And so what's great is like Daryl is basically a Las Vegas native. You've been here basically your whole life.
Basically, I am a native.
You're a native, right? I love that. Yeah. And I've been here, since 88. So I've been here for a long time. So between the two of us, we basically have been here since the inception of Las Vegas.
The dawn of time.
Okay, guys. We're not that old. But
I am.
But we named our podcast Vegas Real Talk for a reason. And that was because why? Because we want to talk about all things in Las Vegas, right?
Yeah, we didn't want it to be just about real estate. We wanted it to be all things Las Vegas. And a lot of times we try to tie it into real estate. But we want to talk about everything.
And so we want people to know what's happening in Las Vegas, the exciting things. I mean, MSG is almost about to spring upon us, you guys. A couple of months, that'll be open.
Yeah.
We have concerts and events. And now the A's are coming for sure.
Yep.
So we call them Las Vegas A's. What are we going to call them?
I don't know. I mean, I think they probably might keep the same name. I don't know.
But it's going to be
interesting to see what happens.
Very cool, because it's going to be like this fun diamond triangle that's happening there. Because you're going to have a T-Mobile, you have the Raiders Stadium, you're going to have the A's Stadium.
Well, they'll have the NBA here soon too.
NBA?
Yeah, that's going to be crazy.
So, John, what can you tell us? What's happening in the economic update? Give us a little economic update for what's happening in Las Vegas. Mortgages, people always want to know about interest rates. I don't know.
And there's something else I want you to answer too.
Okay.
Because it seems like I have said this a few times this year already, like, oh, it feels like it's getting back to normal. And then, and then it feels like it's getting back to normal. Right? And just start and stop. I've just never felt it before.
Yeah. It's a very interesting thing. I think actually the biggest thing that's happening in economics in Las Vegas right now is that the hosts of Vegas Real Talk moved to Real Broker. I think that's the coolest thing going on. But I'm a little biased.
Yeah.
I'm a little biased.
That was pretty cool.
Oh.
Boom.
Yeah. There is a lot going on in the marketplace. There is a weird dynamic in the marketplace that's happening. We have an inventory shortage that's been the case for a decade plus now.
So hold on real quick on that. Let's talk about inventory numbers because it's really important, you guys. Yeah. I just looked yesterday. Single family homes in Las Vegas, North Las Vegas, and Henderson. So basically the whole Las Vegas proper, what I call it, was about 3,800 homes on the market. Single family homes. That's every price point.
And the week before that, it was about 4,100.
Yeah, so inventory is getting scooped up.
Yeah.
The last 30 days, about 1,900 homes have sold. So what that really means, if you are a buyer, it's one home for every two homes for every one buyer in Las Vegas. So basically, and a couple months ago, there was 10 homes for every one buyer in the market. Yeah. So that inventory is getting scooped up.
Well, in January, it was like getting close to 10,000 homes on the market.
Yeah.
And it seemed like we were like headed to a buyer's market, right? And then all of a sudden, and again, that's why I asked you the question, because I remember how busy it was for those 2 weeks when the rates dropped.
Yep.
and the builders were selling homes. Everyone was we were like, we're out of it. Yeah. And then the rates went back up and then everything stopped.
But now, Daryl, you've been doing this long enough, and John too, and I want to go back to where you were going with that, John. But what happens at the end of May if you're a parent? What happens at the end of May?
Hey, your kids are out of school.
So what happens when kids get out of school? Now, every city, every state has different school, but basically like any time between the middle of May and the middle of June, across the country, kids are going to get out of school.
Yep.
What happens when kids get out of school? Parents are willing to sell their homes because what they don't want to do if you're a parent, you don't want to take your kid out of school when there's like a month left.
Yeah.
So what are you willing to do anywhere across the nation? You're willing to now sell. And then again, depending on where you are across the country, your kids start school mid-August to mid-September. So that's the biggest selling season in Las Vegas ever is from May to September.
Yeah.
Because parents, if you have kids anywhere across the nation, you're willing to sell and move when your kids, and you're even willing to sell and like start your kids' school like maybe a week late or something. What you don't want to do is do it usually in the middle of the school year. You only do that if you have to. Right? Especially if you got kids in high school.
Well, I think people try to get it wrapped up before August.
Yep.
You know,
if possible.
Just to be safe.
But they'll close all the way into September. So if you're a seller and you're hearing us right now, that means list your home now. Low inventory, only one buyer for her 2 homes. And this is when buyers are going to be coming across the country to buy. And in Las Vegas, this is the time because they want to move their kids
They're here
into
now.
the school district. Yeah, they're already starting to look.
Starting to see all of our leads are up.
I always say Mother's Day weekend. I've never had a Mother's Day weekend that I didn't work. There's always people in town.
Yeah.
You know what else happens on Mother's Day weekend? It's the same thing that happens on Thanksgiving weekend, Christmas weekend, all that stuff. People get together with their family and you realize they get nostalgic and they realize, oh my gosh, I either want to move mom closer to us, or mom wants to be closer to the grandkids, or the grandkids want to be closer, vice versa, so that people start moving. They get nostalgic. You bring up those feelings and you're like, wait a second, I don't want to be as far away from mom. Mom doesn't want to be as far away from the grandkids. All that stuff happens. So again, if you're a seller.
Hits you right in the feels.
Oh, hits you. It's like, oh, I miss mom. And mom, you start to realize it. You get nostalgic. It's a couple of holidays a year. It's Thanksgiving, it's Christmas, it's Mother's Day. Not even as much Father's Day.
You get a lot of people that...
Or dads.
The dads get hosed.
Yeah, Christmas is a big one. People like to get in before Christmas.
Because they get those feels. They get the feels of
so like October, November, it starts getting busy again.
And you know what else happened this year? We had record-breaking snowstorms across the country. Maybe not in Vegas, but across the country. Record-breaking snowstorms. And I'm getting a lot of people. Now the snow is just starting to melt. I know it up in our cabin. Snow is just starting to melt. And people are saying, screw this. I want to get away from the snow. I don't want to deal with another harsh winter. If you're coming from Chicago, if you're coming from, Wisconsin, you're coming from Michigan, you're coming from, where are you from again?
Minnesota.
Coming from Minnesota, you get where you're like, screw the snow. I'm done with it. I'm done shoveling the driveway. I'm done salting the driveway. I want out. We're better to go to
Well, if
Las
you don't like
Vegas.
Snow, come to Vegas.
Come to Vegas, you guys.
Absolutely.
All right, so Don, back to you. Back to the economic update from the master. Tell us.
Yeah, so there's a weird dynamic in the housing market. We talked a little bit about inventory. That is available inventory. So we're talking about the number of homes on the market compared to how many transactions are happening per month. That's your available inventory. Then there's a real net inventory number, which is how many houses there exist for how many families there are or households there are. And that is...
And you're talking about just in general, like a hard number, what's available. Not what's listed, but what's available for the population.
For sale, what's available to be
just
occupied.
General.
Yeah. The actual structures that exist to house families. And what happened was after the economic crisis 2008, the home builders, rightfully so, got very scared and stopped building houses. And they underbuilt houses for 15 years. So we're in a situation now where we have fewer houses, we have fewer housing units available compared to the number of families and households that exist.
Yes.
And you're saying 15 years because it's been 15 years since 2008.
That's right.
So they've been underbuilding ever since 08.
We finally now, just in the last year or so, got up to what we need to be building on an annual basis to keep up with population growth. So every year between now and then, we have underbuilt. So that is a long period of time where we didn't just underbuild by 10%. Some years we underbuilt by 80%.
Yeah.
Wow.
That's going to take a long time for that to catch up.
And when did you say that started? You said just the last 10 years, right?
Yeah. So that started in 2009. The builders kind of ramped down their building from 2007 to 2009.
Yeah.
And we really underbuilt houses for that 15-year period that followed.
And so
I have to ask you a quick question. Just that, obviously that has a lot to do with all the apartment complexes.
I was just going to mention that.
Yes.
Partner, You're literally plucking things out of my brain. This shows how much we're connected.
I mean,
I was going to say, what happened?
Biggest apartment complexes I've ever seen in my life.
So
I
was just going to say that. What happened in the last 6 years in Las Vegas? All these luxury apartment complexes came up. Now, you and I have been here forever. A normal apartment complex used to be like 200 units, like maybe 300 units.
Yeah, like maybe 20, 15 buildings.
Yeah, exactly. It wasn't crazy.
Now it's like
now we're seeing
buildings.
Yeah, we're seeing 1,000-unit apartment complexes. These luxury apartments. Do you know? I just looked this up this morning. The average rent on a 2-bedroom luxury apartment. So we're talking the new ones that were built in the last 6 years.
Elysium and all these other
exactly.
nice
The
ones.
huge ones, right? The average 2-bedroom luxury apartment rent right now on the newer units. You know what it is? Take a guess.
I would guess maybe 3,500.
I was going to guess like 3,200.
Okay, so it's not that high for a 2-bedroom on the luxury ones, but you're averaging around $2,800.
Or 2,800, yeah.
Sure.
Me and you were probably going a little high. Just
Yeah.
So now on a 3-bedroom, they're over $3,000. To me,
Wow.
that is crazy.
Yeah.
You're in an apartment.
Yeah.
You do not have a lot of times you don't have a garage. There are a few that have garages, but you don't have a garage. You're in a 2-bedroom apartment.
You're living on top of each other.
And a lot of these are 3 stories. You've seen them. A lot of
Yeah.
the big ones are 3 stories. Some are 4 stories.
Yeah.
So you got people a stack above you. Yeah, they have beautiful barbecue units and pools, but you can rent a single family home for $3,000. You can own a
Well, and I
gorgeous
think
home
that's part of the
for
problem is
$3,000 a month.
I think the inventory for rentals is really
It's very
thin.
tight. Yeah.
Right then.
And so a lot of these like younger people that are coming to Vegas,
Yeah.
like they want new and fresh and beautiful. And if they can't get into a single family home,
Yeah.
they're glad to just pay it for an apartment. My question is like, where are they working
Well, and
Yeah.
here's the other.
to afford that?
Now,
Like,
here's the other crazy part. According to apartments.com, if you look at the zip codes in Las Vegas, the average person that's renting these luxury apartments, I'm not talking like, like central Las Vegas, I'm talking luxury apartments. The average person is over a 700 credit score.
wow.
So you're telling me you have a 700 credit score and you're paying, let's just call it $2,800 to $3,000 a month in rent. Is that, you guys, is that not the perfect profile of the
Perfect
buyer?
buyer.
It's a perfect buyer. Why
absolutely.
are you not buying? Because now all you're doing, let's just go easy math. Let's say you're picking, because it's between $2,800 and $3,200 a month for a 2-bedroom on these luxury apartments. So let's call it $3,000. It's $36,000 a year. You basically is lit on fire.
Yeah.
You have nothing to call for your own. You're in
And
an
let's just point
apartment.
out too, you paid 100% interest.
100%
And you're
interest
complaining about paying 6.5% interest,
on something you would own.
but you're paying
So now
100% interest.
Now let's go back to that. So if you were paying $3,000 a month on it, that's something you owned. You now have, let's even say what, John? 50% of that is interest in the first year.
On what? On a
If you buy a
mortgage?
property, on your mortgage is $3,000.
It's way more than 50%.
Okay,
But
but
yeah.
give us an idea. What is it?
So on a $3,000 mortgage, I didn't do the math before we came on here, but maybe roughly $300 of that is going towards principal.
Okay,
So the
you
rest
at
is
least
interest.
put $3,600 a month into your principal. Now,
$600 a year.
I mean,
yeah.
$3,600 a year into your principal, at least, right?
Yeah.
Where on the apartment you put 0, so you
Yeah.
at least got something, okay? And it's your interest is tax deductible.
Your interest is
If you're
tax
owning
deductible.
the
Yeah.
property. So now you can write that off and you're going to have a higher tax return. Also, the owner, the profile of an owner versus the profile of a renter, the net worth is 10 times greater of an owner
Yeah.
of any property.
It's really not even close. If you look at wealth statistics,
Yeah.
home ownership is like 90% of the wealth that is generated in this country.
or
It is-
or something having to do with real estate,
or
right?
something having to do with
Yeah, yeah,
this.
yeah.
Absolutely. It is shocking. It is very clear cut. You either own property and grow wealth or you don't and you don't.
So
Yeah.
let's also talk national statistics, like just normal national regular markets. And a regular market in Las Vegas, not a crazy market, you typically can expect a 6% appreciation. You can just expect that, right? At a normal Las Vegas, we're not talking nationwide.
Yep.
6% appreciation. So let's say you buy that home for $400,000. Let's just talk normal person buys a regular home. The median home price is still about $425 to $450 at any given time of the year. So let's just talk even below median. 400,000, 6%. What's 6% of 400,000, John? You got this?
Oh gosh.
Okay, 24,000. Okay, $24,000. So every year that property goes up $24,000. So in 2 years, again, just we're estimating,
Easy math.
2 years it goes up $48,000. So now let's say now you've just put yourself in an equity position of you gained $48,000. Now in a good year, it would be 10%, and you gained $80,000.
the values in Vegas over the last 3 or 4 years went up like 40%.
Yeah. So let's go even low. Now,
Yeah.
if you were in the same apartment, because your mortgage isn't going to be $3,000 on a $400,000 house. I mean, I guess it could be if you have a really high interest rate, you put zero down or whatever. But the average person's going to put down, let's just call it 10%. So you're going to find it's $360,000. Let's say in a 6% interest rate. Give us a rough idea of what their payment would be.
I have no idea.
Aren't you the mortgage guy?
No.
Well, it'd probably be around $2,000
Yeah,
No.
for
2,500.
380 grand.
No, it's way more than that.
Is it
it's
really?
about $3,500.
Okay.
Yeah.
So
Well, that was because of the higher
Interest,
interest
taxes,
rates.
insurance, everything in.
okay. So
Yeah.
so with that, let's even call it $3,500. So you're paying $3,000 to rent, or you're gonna pay $3,500 to own.
Mm-hmm.
We're calling a $400,000 house. Now, that's really not apples to apples because you're renting we told you, a 2-bedroom apartment with no backyard and no garage. Versus a $400,000 home is going to be at least a 3-bedroom, at least 1,500 to 1,800 square feet, depending on where you buy in the valley. You're going to have a 2-car garage and you're going to have a backyard. So it's not apples to apples, okay?
Right.
Because on the 3-bedroom apartment, you're more like $3,200, which is closer to the $3,500 payment. But you have a backyard, you have no garage, you have nothing you own. So it's not really apples to apples, okay?
Very different living style. Yes.
Different living style for sure. But we're talking about this, right? So again, let's say you did buy a $400,000 house and you did come in with 10% down. Let's just say, right? So you got 10% down. And now you're gaining equity. Now you've gained $24,000 a year versus the apartment you go zero. And after 2 years, you're at $48,000 versus the apartment you go zero. And it's all your interest deductible. So your tax return every year, as we just did tax returns, you're gonna get a larger tax return, maybe $5,000, maybe $10,000, depending where you are. We're just quoting just kind of averages.
Yeah.
But the idea of owning a property versus renting an apartment, it just drives me nuts. I can't believe that these people are paying these rental prices.
Plus, what it does is it increases your purchasing power.
Yeah. Your credit.
Yeah, build your credit, when you got lines of credit that you're paying on time for a couple of years. Yeah, you've made the equity in it, but you can go get a loan, if you want to go get a new car or if you want to get a new credit card or whatever it is. Like, it really just helps your purchasing power.
Absolutely.
Yeah.
So, John, do you want to go back into our economic updates a little bit more from there?
Sure. Yeah, absolutely. So we're talking about inventory, right? And the net inventory, the builders underbuilt for a long period of time. So there is a net inventory shortage, and there will be for the next decade plus. But then we have this, the available inventory, which is the numbers that you guys were talking about, the number of houses available to buy. And that number is very, very low as well. Now, that had risen quite a bit, and people got a little scared. Oh, geez, are we going to have another?
Is that builder thing? I don't mean to cut you up, but the builder thing for the last 15 years, is that nationwide or just here in Vegas?
Yeah, that's a nationwide. That's a nationwide thing that happened across the country.
Gotcha.
And we do have little microcosms of things that are different here in Las Vegas, but as a whole.
So would you say that
trends.
everyone's kind of experiencing similar
Shortages,
issues?
yeah.
Yeah, absolutely.
But and that's why the market got so hot. That's why it went 30% appreciation in a year, because that's not normal.
No,
30%.
But because the rates went so low,
it's not.
and
Yes.
everyone wanted to buy, but there wasn't no inventory, and that's what people were going and bidding.
Yep.
Yeah.
There's no inventory, and when your payment drops from $3,000 to $2,000 to own a property, you're willing to pay more for it because people buy houses.
And
based
people
on
had a
their
lot of
monthly
cash
payment.
too.
Yeah.
People buy based on what their monthly payment
For
they
sure.
can afford,
Yeah.
not necessarily what the dollar value of the property is.
Yeah,
So when those payments went through the floor, property values went up.
Because it got
faster
cheaper
than
to
they would
own
have.
than it was to rent.
Correct. Yeah. Now, so the
In normal
Well, because if the list price was $400, you were offering $430.
correct.
You were or $450,
Yeah.
and you were waiving your appraisal contingency.
Absolutely.
Some people weren't even doing inspections. Like, it was nuts.
For
And
sure.
then someone's like, "Oh, you're bidding $450. I'm bidding $460."
Yeah.
And then
Yeah,
some
yeah.
cash buyer's like, "Well, I'll bid $500."
Right.
I mean, that's what was happening.
That is
Yeah.
absolutely
Yeah.
what was happening. And I think what people expected when interest rates went up is that, oh gosh, we way overshot this. We're going to have to correct way down in price,
which we didn't do.
which we didn't do. Sure, we had some of those really speculative offers. Some of those properties came down from what they purchased them at. But those were the people that were paying
Right.
$500,000 for a house that whose next door neighbor sold
And
for
like
$400,000 a few months
unseen.
ago.
Yeah.
Those were really speculative purchases, and those did lose some value. But what I think you're seeing now is that the market is incredibly resilient because of the lack of net inventory
Yeah.
and because of the shortage of available inventory.
Yeah.
If you look at what the interest rates have done, sure, they've made getting into that house a little bit more expensive. But in the long term, everybody's going to do much better purchasing a property
Today.
today
And they would have
The best time to purchase property was yesterday. The second best time to purchase property is today.
Yeah.
So don't wait. Get off the fence. Get out and get yourself into home ownership. It's the best way to start accumulating wealth in your life.
Yeah, because it is really the thing that I hear more often than anything else is, you know what? We really want to buy. We have the money to buy. We have the employment. We've been in our job forever. We've got a great savings. But you know what?
We're just going to wait.
We're waiting to see what happens. We're waiting to see what shakes out. You know, and I can sit there and tell them all day long about what I think is going to happen. And they kind of just look at you like you're a used car salesman, like, get off me. Like, I'm waiting. And I just think that people are going to, at some point, I don't know when that is. I think the rate probably has to get down to a certain amount.
Well, there's actually a survey that was done that 71% of buyers will get back into the market when the rates hit 5.5%. 5.5.
Which really, honestly, right now, that's a 1 point buy down.
Yeah.
For the average person, or less.
I almost think that once the rates get below 6, when people see 5, I think people are going to start buying.
But you can buy down to 5 right now today. You can do a 2 point buy down, and you're at. So if the normal rate today is 6.5, 1.5 points is at 5. Yeah, exactly.
4.5, really.
You do a 2 point buy down, you're at 4.5.
What I think people that are negative about the real estate market, especially in Las Vegas here, don't understand is that this inventory situation is critical.
Yes, it is. It's what is driving everything.
It is a massive inventory shortage. It's going to stay that way for a very long time. Across the country, yes, but here in Las Vegas especially, because we have a huge number of people moving here from out of state. Yes, we're building houses here. We're building them at a fairly decent pace, but they're not keeping up with the net population growth.
The net population growth, per the DMV, they say it's 8 people move to Las Vegas every minute.
Yeah.
And that's net population. So let me explain that one more time so people understand. That counts the people who are moving away as the people who are surrendering their licenses, and then the people who are getting new driver's licenses. So there's also people that they can't track because they didn't get a driver's license.
Correct.
So all those people who didn't, I mean, how many people do you know that are like, oh, I've lived here 6 months, but I haven't switched my driver's license over yet? Those people are also moving here.
Or you have a 4, 5, and 6-year-old. They don't count.
Yeah, exactly. So, I mean, so there's, or people just don't drive. People who are retired that don't drive. There's lots of teenagers who don't drive. So they're saying 8 people a minute. It's probably more realistically about 12 people a minute moving here to Las Vegas.
Yeah. So that's explosive growth. That is huge growth. And we're going to continue to see that happen. And there is no way to build ourselves out of that quickly enough. So you are going to see prices go up.
Yeah.
There is no other direction for them to go. Prices are going to go up from here. So if you're thinking about, oh, geez, I'm going to wait until rates come down. Guess what? Everybody else is waiting for the rates to come down. If you do that, you are going to be in a critical situation where it's multiple offers,
competing,
where you have to give away the farm to get into
That's going to be 2021.
Where you're going to have 3 times the amount of cash you do now because you're not going to get any seller concessions. You're not going to get any relief from the price, and you're probably going to have to pay over the appraised value.
Yeah.
So that's my advice to anybody that is on the fence or considering it, or maybe even thinking I'm going to wait and get in later. Don't do it. Get in the market right now.
Yeah, literally just in the last 6 months, things have changed so much. So I have a big builder in town. It was a DR Horton gorgeous home so we're in May now. So this was November. In November, the same home, the base price was selling for $800,000. Then they were doing upgrades and lot premiums. So people were closing at around $950 to $975. That's what they were closing at. Okay. Even though the base price was $800,000. Even Melissa had the same builder. So we had 6 months ago, my client tried to go in there, bought it, and we got $50,000 off. Plus they paid $20,000 in buy down and closing costs. So that from $950, they were really getting in effectively about $870. Today, that same builder is now doing a lottery again. So it's like, nope, we're not giving you the 50 off. We're not giving you the 20, and we're doing a lottery. So by waiting 6 months, the same buyer that now is going to close is paying $70,000 more.
Yeah. Well, it's going back and forth, right?
Yeah.
Because it's like in the beginning of the year, they were giving away the farm.
Everything.
5% co-ops, paying you 3% closing costs, giving you $100,000 in upgrade. Like it was just nuts, right?
Yeah.
And then it went away when it got busy. Then it came back.
A little bit.
Now it's gone away again.
Because
it's like they follow the builders follow what's popular.
Yeah.
So, I mean, I'm just saying, if I were a buyer, I'd be looking for my deals now, looking to see when there's the competition's rising. So you have a short window where they need to get in.
I got one of my clients in a new home in Summerlin West. And it was during this period where there was like 10,000 homes on the market. And he got an amazing, they took $70,000 off his lot premium. It was a $100,000 lot premium. He got a $30,000 lot premium.
Wow.
He got, I forget, $50,000 towards his upgrades. He got 3% towards closing costs, the whole thing. If they used his lender, the whole thing. Well, literally 2 weeks after that, they went back up to a $100,000 lot premium, and the price for the homes went up $200,000.
Wow.
Yeah, like just 2 weeks later.
Yep. It all depends on, because, and the other thing is with new homes, I don't know if a lot of buyers know this, but it depends on when the builder's fiscal year ends. That does not mean it's December 31st. Some builders end March 31st. Some builders end June 30th. Some builders end September 30th. So it all depends on when their fiscal year ends, when you're going to get a better deal. Depends on what seating inventory they have. Depends on if somebody canceled. Depends if there's deposits on that home. There's a lot that they don't know behind in the back end. And so a lot of times as realtors, we have all that inside knowledge where it can be a difference of 10% difference on that price of the home and the credits you can get. Yeah. I mean, you're talking at $90,000 or $900,000 home, you're talking $90,000 could be a big difference. So it's really important when you're looking at new homes, you talk to your agent first and say, wait, can you find me a better deal? Because I've literally closed, we had homes closing on the same street that was the same model, and the builder was selling one for like $80,000 less than the other just because of when we struck the deal. It was like we struck the deal a week earlier, but it was before the builder's fiscal year end. Yep. And so they were willing to be more negotiable. As soon as their fiscal year starts, they're like, oh, maybe a year to catch up. No problem.
Well, I did that video about Summerlin West, and I had like 26,000 views on TikTok. Mm-hmm. But I was talking about how important it is to get, if you can get in the first phase in some of these areas. Yeah. By the time they're done on phase number 12, like you've made a lot of money. You made a lot, especially up there in Summerlin, with the new park and the new downtown Summerlin they're going to build up there. It really is a good time to get in. Like you said, the best time was yesterday. Yeah. Today is the next best day. Because I mean, as far as the builders go, based off of the inventory issue that we're talking about, it's just going to continue to get better and better for the builders. Yeah. Because they're building their own inventory. Yeah. And it's going to get crazy.
So, John, are there any last little tidbits you want to leave our viewers and listeners on any kind of economic update that you think is important for them to know?
Yeah, I mean, I think that...
do you have your crystal ball? What's the forecast?
Where it is. A little bit. No, the forecasting what's going to happen in the economy is very difficult. The Fed is being aggressive about trying to rein in inflation, which is why interest rates are high. As the Fed gets a control of inflation, and we've seen 10 consecutive months of lower inflation numbers, which is great. As the inflation numbers come down to their target of 2%, not when they get to 2%, but when they start to head in that direction, the Fed is going to reverse their policy of increased interest rates, and you're going to see the Fed rates go down, and that's going to precipitate lower rates across the board, which includes mortgage rates.
Thank you, Jesus.
Yes. However, I would advise when that happens, the competition for the amount of available inventory is going to be crazy. Please don't wait for that to happen to get into the market. Build your wealth by buying a house and do it today.
Yeah, and also, I mean, we don't have a crystal ball, but we do know that election year's next year, and we do know that typically rates go down. Everything goes down because trying to get reelected. Yeah, sure. So yeah, you're going to pay a little bit higher rate right now, but like we talked about, you can get a better deal, get your closing costs paid, because there's still deals out there. There's still homes that have been sitting for a while. Yeah. There's only 3,700 or whatever homes available, but that number is dwindling every week. So getting in now, yeah, you have to pay a little bit higher rate. You offer a free refi.
Free refinance.
We will do a free refinance.
If you refi within 18 months.
If you close on a house and use us for financing by the end of July, we will do a free refinance if the opportunity presents itself within 18 months.
Which it makes sense, right?
Right. Yeah. And we're doing that specifically because we understand that a lot of people are waiting for rates to come down, but doing that is going to put themselves in a worse position. Buy the house now, and then when the rates go down, we'll refinance you for free.
Which is actually great because now you just took all the fear away from the buyer. Like, oh, should I wait? Nope, because for the next 18 months, you're protected. And we do believe rates will go down in the next 18 months. So buy the house now when there's less competition and then refinance for free in 18 months. I love it.
All of the forecasts are for rates to be lower 12 to 18 months from now than they are right now.
Yeah.
But the trick is don't wait to buy the house. You can lock in today's pricing, today's seller concessions, and then refinance to the lower payment in the future instead of waiting for that lower rate and having to pay $50,000 or $100,000 more for the house.
Yeah, because it's like, okay, I'm going to wait. Great. I waited until the rate got to 5.5. But now the $500,000 house I've been looking at, now I have to pay $550,000.
Yeah.
And I don't get any closing costs.
Right.
And I don't get this and I don't get that. Like,
And.
dude,
It's all worse.
It's going to be bad.
Yeah.
Yeah.
And for sure.
All right, well, great. Well, we appreciate you, Jon Gedde, for giving us your economic forecast and letting our buyers and really buyers and sellers know what's happening in the market. Do you have anything else you want to?
Congratulations to Jillian and Daryl on their move to Real Broker, the host of Vegas Real Talk. Moving to Real Broker is so great. It's so fitting. I think it's a great move for you guys, and congratulations.
It is really. Thank you.
Thank you, Daryl. Anything you want to add for our listeners?
No, that's it. Just you guys need to get out and start buying.
Yeah. And we wanted to be here for you guys and make sure that our whole team is positioned to Real so we can offer the best tools, technology, marketing, nationwide platform, international platform.
Well, that's why we call it the growth movement, right?
And we're part of the growth movement.
Yeah.
So we are growing, we're building, we want to be better realtors every single day for you out there. So if you need anything, reach out to the Bachelor Group. And thank you for listening to Vegas Real Talk.
Thanks for tuning in.
Thanks, guys.
Awesome.